11 FOMC members, at least 5 of them you can consider doves. This is going to be a closer call than the market might think.
I think so, Jamie, and I think, you know, if you actually look at what some of these members have been saying, a September taper hasn't implicitly been, you know, suggested. They have at no time suggested that they will taper in September. You know, when I actually look at the way the FOMC members are ranked, I would say actually, you know, 5 are confirmed doves, and I think, you know, maybe 6 or 7 probably a lean to the dovish side. So, well, as you say, it could go either way.
Well, the 5 doves, of course, Bernanke, Dudley, Yellen, Evans and Bullard. What if the Fed doesn't taper?
If the Fed doesn't taper, then I think you can see a significant decline in bond yields and a pop in equity markets. And I think we've already starting to sort of lean in that direction, because I think if you'd asked me 2 weeks ago what the consensus view for a taper would be, it would be in the region of around about $10 or $15 billion of US Treasuries. Now the estimates are sort of coming in around about $5 billion. And if that's the case, why bother?
But if the Fed doesn't taper, I know you said that there's been no explicit word from the Fed that they will do anything this month, but the market thinks it will. The Fed hasn't done anything to counter that. If it doesn't do anything today, surely its communication strategy will again be called into question.
Well, I don't think their communication strategy has been particularly good at all this year in any case. But, you know, I think we've heard ad nauseum from people like James Bullard and Charles Evans that it's very much data dependent. Well, if you're going to take the view that it's data dependent, Jamie, then you look at the data, you look at the payrolls data, and you have to argue that really the data does not support a taper of any shape or form. And really then it's a question of how you manage the guidance going forward. Now, if they taper and extend their guidance forward, then it really begs the question is, why are they tapering?
Fair, yep, it certainly does. Having said that, you've mentioned stocks and treasuries. The gold market appears to be pricing in some form of taper. It's this morning at a 6-week low below 1,300.
That's right, and I'm keeping a particular eye on that 1273 level that we saw in August. And I think, you know, if we do get a taper, there will be an expectation of further tapering down the line, and that will be very negative for the gold price. If, however, we don't get a taper, then I would imagine that we'll see a significant rebound in the gold price.
So we've talked about gold, stocks and treasuries. Of those 3 markets, which one do you believe most?
I believe the bond market.
Okay.
And the bond market, the yields have been coming lower from that 3% level. Now, you could argue some of that was as a result of what happened this week with respect to Larry Summers, but I think that's a little bit of a smokescreen. I think it was always very unlikely that he would become Fed chairman, given the opposition within the Senate Banking Committee. So, you know, I think we're back to the original question is, how much do they taper by? And if they do taper, or if they don't taper rather, what happens then? Do they then give forward guidance on a possible tapering plan? Essentially, because we've still got a massive roadblock ahead, the debt ceiling.